Welcome to the Euro Trade. I'm your host, Marcus Stalker D. If you're new here, I've been trading for 18 years, working for various prop firms in the last 12 years. And although I do have a Series 3, I'm not a CTA, so everything you see today is for educational purposes only. All right, so let's get ready for the day. As always, I'm going to put the first focus on metals, and then we can also have a look at the energies markets with levels that may come in a little bit later in the day. I don't like trading energies this early anyways, so let's first have a look at crazy gold, and we're going to start on the weekly chart as always. I mean, look at it. It's a relentless uptrend once again. I do see some stuff on in the options chain that might be an interesting development and could be cause for some pullbacks. So first and foremost, weekly chart, nothing much to glean from this. Up, up, and up, right? So that's not really giving us all that much. Now, on the daily chart, things are a little bit different. So first things first, we do the supply and demand analysis. So we have the nearest demand level is down at 40.34. We're quite a ways away from it. Let's have a look at the 4-hour chart. This was yesterday overnight, so we had the reaccumulation for the Asia time frame, and then a very nice base rally going from that point. But today we don't really have that for the Asia market. However, still I'm going to mark off the Asia high and Asia low. No pullback for Tokyo today. Only a tiny one, very small one. Okay, so where was Asia high, overnight high? So before London, all right, so it is sitting at 42.18 roughly. And I'm going to make this into a yellow solid color as always. So that's let's call it Asia high. Now, as the day progresses and we get closer to COMEX and LME, London Metal Exchange, I basically would like to see what happens if we get back there. But as the day progresses, this Asia high will become overnight high as well because we're moving higher. So as we get closer to COMEX and LME, the new high will become the new reference point. And where is the Asia low? Let's have a look. Where did we open? Globex open was this candle here. So we're going to put another marker and call it Asia low. Next up, where's COMEX value high? 41.69. Put that in purple. COMEX value low is located at 41.41. So that's also sort of a round number. 41.41. Interesting. It's actually sitting right on top of that daily demand. And finally, having a look at the quantitative extremes. Right now, the full range extension and exhaustion for the 8-year high is 42.44.7. So a little bit higher up. And I will go through yesterday's trade. I was on fast markets, and I did go into copper trade that recovered the day nicely. ADR high up there, and then ADR low, which is they're still fresh, so we have not exceeded or touched the average range for the day. So 41.62.5 is the ADR low. Right, so now that those price points are in, I like to look at the options chain just for extra orientation. The gamma wall, the call wall, has not changed. It from last night. It is still sitting at 4,200. That's where I have this white line. So I'm just make it a round number. But one worrying thing is that we have some GEX levels, so levels with high open interest, but they're not exactly any kind of a call wall or anything like that. It's just slightly less open interest, but still very relevant. They're all lower down, so this is unusual. Most of the days when prices go into a new all-time high, some of these GEX levels will be higher up, even so. But today, that's not the case. They're all actually lower down. So we have GEX 3 at 41.75. And then GEX 2 is massively lower. It's 41.25. So all the way into this demand area. And for those asking, yes, I did follow my plan. I only did 3 trades on the day. And the third one worked out with a bigger risk reward. So that's how things are. Yes, you can go back to watch fast markets. I was on with Mandy, Jack, and Andre. And I just held one single trade from LME. I did not try scalping, so I definitely followed my challenge that I set out for myself, that I'm not going to try and do more trades on fast markets for whatever reason. So that was very good. And it wasn't, to be honest, it wasn't even that difficult. Once I went in with the intention to not grasshopper in and out of trades, things kind of became very relaxing, and all I needed to do is just to track the trade, and it was awesome. It was very, very good. Angie is asking me, am I better today? I'm a little bit better today. I managed to take, remembered to take a painkiller before I came on, so yesterday I didn't do that, and I think that was a mistake because I felt really terrible. But yeah, so I think I'm slowly getting better. I don't think I'm going to have like a full-on cold, but it's just like, all right, Param Dali. Do you think a pullback is going to happen for gold? It's possible. So with the way things are right now, we're obviously sitting above the Asia high. So I don't want to necessarily short gold at all. But seeing how these bigger levels, core wall, GEX 2, GEX 3, they're all lower down. And what tends to happen is that they act as magnets on a lot of the time, a lot of the days when the market looks like this. So there is a chance, but as always, it's probably going to happen much later in the day. Maybe towards the end of this stream, as we get into the London Metal Exchange time of day and closer to COMEX, I would like to see some sort of a pullback. I mean, nothing really goes just up in one direction intraday. So there's always market makers that are trying to hedge against whatever is happening, and I'm just going to check what gold is doing today. Yeah, so we're in a positive gamma environment. What does that mean? Well, it means that any levels that we come across in the option chain, now look, it's in an uptrend. Nobody's denying that, right? But in a positive gamma environment, if you start to see a sell-off, then these three levels tend to act as stabilizers because they are used by the market makers to hedge against the intraday underlying moves, and therefore they cause extra liquidity for the rest of us to have really nice tight spreads, but also they want to remain delta neutral. So even in uptrends, usually there's a little bit of a slowdown. So if you look at how the price behaved as it reached the call wall the first time, this is a behavior of positive gamma. So we don't just kind of slice through it and keep going. That would be a negative gamma behavior, right? But positive gamma means that anytime you run into these options levels with higher open interest, it's going to be a little bit of a roadblock, so to speak. So it's kind of like you run into a stop sign and then they wait a little bit, but because the trend is so strong, it basically carries on higher after the reaccumulation happens, if you're a fan of Wyckoff. So yeah, is there a chance that we go down to the call wall? Yes, very strong chance. Is there a chance that we reach GAX3? Yes. Is there a chance that we reach GAX2? Well, without any kind of Trump tweets or external catalysts driving it, maybe GAX2 is not really on the cards. And the reason why I say that is because we have the quantitative extreme of ADR low, average day range low. It's an exhaustion point for whatever gold has been doing over the last 10 days. So if we go way below it, it will be a bit of an outlier day. Having said that, this big red rectangle represents the demand, the nearest demand area on the daily chart. So, I mean, it's possible. Do I see this happening this week? Maybe. Maybe if we get some news. But I wouldn't necessarily be short. I would like to miss out on the pullback. So just watch it happen, intentionally missing out on the reversal. And then maybe trying to swipe along somewhere in this whole zone. So around Asia low, ADR low, COMEX value high, and GAX3. So that becomes a zone where I want to be a buyer. Where exactly, I don't know, because I have to see how price behaves at that point. And I'm not much for biases. And can this go higher? Yes. Would I be okay at longing this at 4,200 if this VWAP at the call wall puts a stop to the prices and creates a reversal? Yes, but the time of day has to be right for that. So ideally, I would want to see prices not bleeding lower than 4,200 by the time that we reach Euro close, maybe like 90 minutes before the Euro close. You might want to fish for some longs, but yeah, I have 2 points where I want to be a buyer. My primary one would be this GAX3 area and slightly below it, and then the second area would be if we manage to hold this call wall. But other than that, I don't think I want to be short gold. Like, I'm not going to be that person who's like, yeah, it's shorted at all-time highs. It might seem like once in a blue moon, those kind of trades might work out. But I just don't like the fact that we've gone higher than the Asia high with no pullbacks, and we're above the call wall. So all of that is pretty bullish. So until we have a pretty decent pullback, I will be staying out of that. Now, let's have a look at copper, because I know copper is gaining a bit more interest in the community. It's a much slower product. So if you're after something that is not going to make your heart jump up and down, then have a look at copper. Because to be fair, gold is beautiful, but gold is also a little bit bonkers sometimes. Same thing with platinum. Platinum moves, like when it moves, it's just like, you know, if you get it wrong, it punishes you like really badly. So yeah, you have to be very, very careful with those two products. But copper, it provides you with ample opportunity to think about what you're going to do in a trade. And it's one of the more stable products price action wise. So on most days, it's not going to have like sort of psychotic price action intra candle. And whenever you have, let's say we're looking at a 30-minute time frame. So you see that the current candle, I mean, we still have about 13 minutes before this one ends, but if the candle turns green or blue on my charts, it's very unlikely that all of a sudden it's just going to massively change direction and turn into a huge red candle without an external catalyst. Obviously, if we come into news or CPI, PPI, yes, that can happen on copper too. And you can also see many teleportations of price. And the reason for that is that copper is pretty thin. So you have these little gaps. Unlike some more liquid products where gaps are non-existent. So you can see gold, there are no gaps. But copper, RBOB, heating oil. And yesterday, Andre asked me, Dee, what is the weirdest product that you've ever traded? Now I'm like, I think it's heating oil actually, because it's like such an obscure energy market. But I like it. Like I do like it because it does move. However, it also suffers from big gaps like this. So you have to be really careful where you're getting involved, especially if you're in the live market. You know, for XFAs, it's not that relevant because you'll get a fill anyway. They try to simulate it, you know, but it's still a sim, so it, you know, the fills are always a lot more favorable on sims, much easier. But yeah, so heating oil would be the weirdest product ever. Okay, so copper, we're still looking at this big, massive candle that we had back in July. And they're really trying to get through it. It is a weak structure because it happened so fast and it kind of left single prints behind. So with the way we are trundling through it, I would expect this to continue at some point. So I am a little bit bullish on copper, but I'm willing to entertain both sides of the story because for now, we haven't still made a higher high on the weekly chart. So daily chart has a bit of a consolidation. Is it a reaccumulation? I don't know. But for now, we're sitting right above the 16 moving average line, which is this line here. And until that changes, I will look at this as a potential for a reaccumulation because we do have this weak structure up into this candle that is quite visible on the daily. This was a drop-based drop from a supply and demand perspective. Because it's on the daily chart, I would actually take potential kind of longer outlook target for this move to be 569.60. We do need to tackle this low volume node here. With the low volume nodes, when the price action touches it for the first time, you expect a pullback. So with the way the previous high is located, I would actually like to see a bit of a liquidity grab and then a reversal. So it's a setup that we used to call the stop run and reverse. Now, for the daily chart, you really need to be in the right context for that because daily chart supply demand zones don't frequently do the whole take out the high then reverse. Sometimes they do, but most of the times they will actually hold the beginning of the market point shift, which this consolidation area is sitting at 507.45, and it's reacting, right? So we touched it, and now it's kind of having a bit of a reaction. But on an intraday time frame, it's stuck at VWAP, and it's trying to fail the auction downside. So if I mark the initial balance with another little box. So this is your first hour of London. Bear in mind that London is not the main session for this product. It's LME, first and foremost, that has a lot of say in the copper pricing. And then you have COMEX. But a lot of the times you will start to see copper already starting to move at LME open, and then it does a head fake, so it goes the wrong way for the first sort of 20 minutes or so, and then it turns around and everything becomes a little clearer. So those kind of pointers are what I use to get into my positions, but also the overall location of the price in relation to other orientation points. But as it stands right now, in the simplest way possible, we're sitting above VWAP. And if I look at where the COMEX value high is, it's literally just there. So it's 503.18. Still too early to call a slight mild imbalance to the upside. 320, that'll be good enough. So let's just change the color of this and do some markers so we can see how that all looks and how prices are reacting. The COMEX value low is located in 498.10. Oops. Plenty of room for the ADRs, but just to put them on the chart for the sake of process, 518.20 is ADR high. Very far. And yes, on my other charting platform, I have indicators that do all this for me automatically. So all I'm doing is just dragging out levels. ADR low is at a nice round number of 490. So again, we're well within the range. There's no outlier day today yet. If we ever get that CPI release, that could cause an outlier day in copper, because copper is super, super sensitive to inflation. And then let's have a look at some relevant options levels. All right, so I can see the GEX3 was already reactive. It's up at 506, 507. And just like any other level, it's a zone. Nothing is like a singular price point. So you can have prices kind of wagging up to and through the GEX level, but the expectation is that GEX3 in a positive gamma environment will act as a stabilizer. That's exactly what we're seeing here. So this is your market makers going hedging against any perceivable rally. So very, very normal day so far. Where's GEX2? GEX2 is sitting at a nice 5 evens round number. Let's put that down as well. GEX2 is also a stabilizer in a positive gamma environment. So can we see prices going down to 5.0? Yeah, definitely. And then the gamma wall, the call wall, is down at 498, which is kind of interesting that they are all the way down there. Oh, I'm going to sneeze. Or I want to sneeze. All right, so I'm going to recycle this value low because it's so close to the round number. We can just give it 2 names. So 498. Does it look like it's going to be a massive day in copper? Probably not. Like, I think it's probably going to be fairly fairly contained and normal. So from that perspective, things are easier. Can you look at silver? Yeah, I can look at silver. Let me see if I have that chart up already. Yeah, I do. Okay. Beautiful. Beautiful. It was beautiful. Silver. I like silver. Right, so let me grab another chart here. Silver. And we're going to do the same analysis, so we're going to start on a massive time frame. Silver is lovely to trade, but I'm of the opinion that silver is a bit expensive for most combines. You know, you really need to, like, even micros are really expensive. So you would need to have a pretty sizable account balance before you would trade silver really easily. And my voice just dropped like an octave. Like, what's up with that? I'm turning into Hogue. All right, so, you know, fairly bullish, not as bullish as gold. because gold is just crazy. This looks fairly strong on the weekly chart, but we did have a slowdown. So what I'm going to do, I'm just going to mark that off with a rectangle. And, you know, technically you could call this a rally-based rally, but the thing is, with the rally-based rally formation, you really need to see it happening early upon the reaccumulation. So, you know, it rallies and then kind of pauses a little bit. When it's this high up, like it's usually something that happens in strong trends, but when it's this high up, and it doesn't really have much of a base. If we compare, you know, gold or something, like maybe there's a base on the daily. Let's drop down. Okay, yeah. So there is a more of a base on the daily chart. And yeah, it looks like kind of twinsies with gold a little bit. So they have been following each other somewhat. Ah, yeah. Okay, you see, so 4-hour chart is where you see the demand area on gold, whereas on silver we spend an extended period reaccumulating. So if you look at it that way, silver is a little bit weaker than gold, even though it's still at all-time highs. But I mean, we haven't gone into yet another all-time high on the day. So yeah, definitely a little bit weaker than gold. Let's have a look at the 4-hour time frame. Just a bird's eye view. Setting above the 16 EMA and above VWAP as well, just by a little bit. 16 EMA has been supportive for the last couple of days or so. That's good. All right, now let's get into the intraday side of things. First thing is Asia high and Asia low. So London session is open here. So this was Asia high. Change the color of that. Find Globex open. There it is. And that was pretty much the low. Asia range not massive. I think gold has a much bigger Asia range. So even there, I think this is a little bit weaker. COMEX value high, sitting at 50.76. Value low, sitting at 49.83. Just need to send husband a message. I have the Cavalier in here and just heard his belly making some noises. All right, where was I? Okay, next up, ADR high, ADR low, same thing. So ADR high sitting up at 52.44. There it is. ADR low, 49.90. So right above this COMEX value low. Options. Okay, let me just load them up because I have platinum on there at the moment. So we'll do silver. gonna load automatically. Yeah, okay. Yeah, so similar situation in copper as in gold. We have the call wall at 51, and then GEX 2 and 3 below it. So we have gamma wall at 51. There we go, so make that solid white. Whoops. And it's where the calls are located, so still bullish. All right, so GEX 2 sitting at 50.75. Right at COMEX value high. So I'm going to rename this as well. So I'm going to do slash GEX2. That's a confluence right there. And the core wall and this level are pretty close together. So if anything, silver looks more likely to retrace down to this area than gold. And then GEX3, sorry, GEX3, 50-50. That's a nice number. Is it eating? Yeah. There we go. Okay. So yeah, similar outlook as gold, less crazy. So pullbacks down to these areas might be more on the cards today. But yeah, still trading within the ranges, no outlier day. Just like a little bit more bullish. So yeah, very, very similar to gold, just slightly less crazy. Yeah, there we go. Those are your silver levels. Why is the volume so low? I don't know. I'm maxed out on my end, so it must be something to do with YouTube. I mean, I'll check it again, but usually, yeah, I mean, I don't have much. And it's not that low on my end. Like, I'm hitting minus 15 decibels. That for speech, that's actually pretty high. I mean, I can try and push it by a couple of decibels. Let's try that. Is this a little bit better? Right. Somebody's saying it's not low. Yeah. Okay. Mariano, I don't know. Are you listening to on like a laptop speaker or something? I don't know what's going on because, you know, I work by levels. I was a sound engineer for many years. And yeah, I'm hitting minus 15. You really don't want to go any higher. Like maybe you can have music going up to like minus 5. But yeah, for speech, it's pretty interesting. I see. Yeah, we have a toy on the chair in the background. You can't really see it on the camera, but somebody's brought me a toy. Yeah, I don't know. It's weird, right? Okay. Oh, Sandy has joined us as well. Good morning, good morning. It was nice to see you all last week. Mr. Smith says, ahoy, Deeyana, greetings from Slovakia. Greetings, greetings. Hello. All right, can we get the dogs out now? They're very excited. You know that Astrid is just going to get that, right? Oh, we've got a doggo. We've got Astro in the background. I'm not sure if you can see her. It's a little bit dark over there. Anyways, can you close the door? Thank you. Did he eat something? Oh, yeah. Yeah. Okay. Yeah, so my Cavalier, he's generally pretty, you know, there's nothing much wrong with him. He's deaf and he's got MVD, which is normal for a 13-year-old Cavalier. But every so often, he gets a sensitive stomach. And he's not as bad as some Cavaliers. Some Cavaliers are really quite quite sensitive. But he does have food sensitivity, so, and he usually likes to be here with me. So I heard something was going on, so I asked my husband to deal with him, and I think he's had some stuff. And of course, every time food's involved, we have Astrid over there. She is a food monster. She would sell her own mother for a piece of bread. So yeah. All right, so we've got all the levels. Let's track what's going on with this copper, because that's usually the focus of my trading, especially for later on. So touch of the COMEX value high, prompt reversal back inside initial balance. That's pretty bullish. But I need to see whether this will actually hold into a 30-minute time frame. And yeah, I'm not, so I'm trying to save the profits from last 2 days. So I'm going to trade at the time of day when I have the highest probability of setups working out today, which is why I've gone onto a combine, just to remove a bit of risk. Because, you know, I don't have like, just to clarify things, I don't have the possibility to have an XFA because I'm in a live account. So for me to be trading the live at the time of day when I usually trade DAX, it's just not, like, it's not really a good practice. If I had the possibility to have XFAs, then obviously that would be a different story. I can do a few punts here and there, you know, and even if they don't work out, it's not a big deal. But once you're in a live account, the stakes are higher and they change. It suddenly becomes important to follow your rules more than ever. And you know, it's not easy just trading in just one single account through multiple sessions. And usually when I used to have XFAs, I didn't copy trade them, but I had designated XFA for each time of the day. So one was London, the second one was LME and COMEX, and then the third one was kind of end of day stuff, usually on the energies markets or sometimes even equities. But yeah, if I don't really have the possibility to run multiple things, that is very, very difficult. So removing risk by going into combine is one way of doing it. Where do I get my GEX data from? I get it from a company called Mon-Thurs. If you go to my channel, which is underneath this video, and usually Bruno also posts it here, the last video that I did, even though I don't do that many videos over there, because every time I do a video, I want to add value, and if I've got nothing to talk about, I'm like, well, should I just like keep churning videos? I'm not going to do that, right? Because my YouTube channel is not really the focus. You know, whilst some people would say, oh, Dee, you're a YouTuber. I'm not. I'm a businesswoman, and, you know, I like to provide value. And if that means I'm only going to do videos every so often, so be it. So I would rather be quality over quantity, as always. But if you go there, you will see the final video that I did, I think it was a few weeks back, and it's all about Mon-Thurs levels. So you can go in and grab the link and all that. So if you want to try them out, I do think they offer a trial as well. But yeah, you get access. It depends on what kind of membership you have. But I think on a basic one, you just get their website where. So let's show you. So you get a website where you can look for the conditions and stuff, and you still get the levels, but they're not nicely on the chart. So that's what you get with basic things. So you can see, and they do integrations for nearly every single platform out there. They actually wanted to code something from Topstep X, but because you can't really do external indicators just yet, so there's no third-party indicators, that was not an option. Otherwise, they would have jumped on it like immediately. And then if you have a premium subscription, then you get access to mostly end of day indicators that plot these on the chart. Now, equities do have the intraday version as well that is updated about 5 times or 6 times a day. And it tracks the intraday gamma flows. Obviously there are free sites and, brokerages where you can just go in and look at the options chain yourself. But that's a little bit difficult because it's like how you can look at the open interest and then decide, it's not very intuitive, let's put it that way. And I used to do just the matrices. So I used to go in and look at it. And I'm like, okay, so that's very confusing. And then I would spend like literally an hour of my time trying to figure out which levels have the highest open interest, which ones have slightly less. Where is the gamma flip possibility? You also have DEX and a whole bunch of other things. So yeah, it gets a little bit cancerous and time consuming. So having something like Mental Q for me has been a godsend because it cuts down my process significantly, and that's always a positive thing. Which is your 90-10 setup with gold, and what is the preferred time? So wouldn't say 90%, but I would say it wouldn't be on gold. Like if we're looking at that high of a probability, I would turn to RBOB and crude oil because that's what I traded for 12 years quite heavily. And in fact, I was an energies trader for a long, long time before adding metals into the mix. And I added gold probably about 2 years into my prop career, so somewhere around 2015 or so. And then I slowly over time added some of the other metals and some of the weirder energy markets as well that I found I enjoy very well, very much. But if we're talking high probability setups, so there's a 77 chance probability of the price turning around. To me, it's the time of day, right? So of the price turning around on the energies markets into or around the euro close, which for my time of day is 4:30 p.m. and that's, I believe, 10:30 a.m. Central. So that would be one of them. Now, if I can have a setup, which won't come very often because it's a super high probability setup. Let's say that we had an open below the value, then the market goes all the way up to close the value gap. So you go into a mean reversion trade. And at the point of reaching value low, it's a pretty extended move, but within the day's range, it exhausts the ADR high. Then we go into the euro close, or half an hour before then. That's my star setup. Like that's something that it won't happen every day because a lot of the times the test of the value low might happen towards the end of the day. But if it aligns with the time of day for the euro close, that is by far the highest probability setup. But if you're just looking at sort of like 70% of the time, some sort of a reversal into the euro close on energies markets, and even to a degree on gold, that's also pretty high probability. Now on gold, because of the big uptrend, if you have overnight going higher and higher and higher, and then COMEX kind of does a little squiggle at the beginning and then carries on higher, is that the cause to short around the euro close? I would say not, because what you'll find is that in and around that time, any sell-off is quickly bought up. So the market makers work very hard to kind of push it back up. But yeah, if another high probability setup is on DAX. I don't have it on, obviously, Topstep. We don't have DAX and Eurex products. But the highest probability setup in DAX would be in the first sort of 2 hours of London for DAX to take out the Asia low and then to return into the range. That's been my staple for a long time. And then it basically rotates throughout the entirety of whatever the London already did. So on gold, like I said, this time of the day, sometimes you will see, very rarely you will see like decent moves for this time of the day. Most of the time it goes into some kind of a range. So even though it starts looking great like this, you then get stuck in candles that are overlapping and basically consolidating. This looks a little newsy to me right now, so let me just see whether we just had something. I think it's something about BOE. We just load up financial juice. Are these levels actionable for scalping? Yes, absolutely. In fact, if you want to scalp, that's how real market makers do it. So they will look at these levels and they will try to scalp a few ticks in and around them. But, you know, market makers used to be very skilled at order flow. And most of them didn't necessarily use charts. They would just use, you know, the options chain and the dome. And then they would look for inefficiencies in the dome and just kind of hunt for liquidity and then hedge against it. And you will see most of the time, like if we look at, let's have a look at gold. So you will see that it doesn't really have a heat map here. Let me see if I can bring up. Yeah, there's the pullback that I was talking about because of the magnet potential of these levels lower down. So yeah, this is why I was not really keen on doing anything there because I could see it. Let me have a look at gold. Now, if we go back through, can I go back that far? It doesn't quite remember that far back, but you know, for nearby levels, so one thing to look out for is as we get closer to 4,200, is there just a singular price point or is there like multiple price points that are starting to create orders there? The thicker the order block on the dome, the more chances that it's going to act as a stopping point. But if you just have like one singular price point with like a ton of contracts on it, that usually gets taken out. And then they sort of take it out, then reverse. So the classic liquidity grab. So, you know, stop, run, and reverse. And you can see it very well. So right now we're building a tiny little shelf that is not big enough to necessarily stop the aggressive buyers. You would really want it to be fairly thick, like to span at least, you know, 20 to 30 ticks. But yeah, so what was this? I don't know. I mean, there was something from BOE, like bonus deferral period to be cut from 8 to 4 years, new rules. Like, how does that relate to anything? So I'm not really seeing anything that would cause this unwinding. So maybe it's just like general profit taking. How are we doing on the government shutdown? Where are we with that? I mean, it's going into the third week. That's annoying. I don't know. So maybe it's just a random unwinding of positions. Somebody closed out a whole bunch of positions there. But yeah, again, magnets, right? Magnets is open interest, SKEX levels, and the call wall. So let's see what happens as we get closer to 4,200. Just for educational purposes. And we have VWAP right above it. But usually, even when you have VWAP, it will still at least touch the call wall. And then we'll see what happens, whether they want to go even lower to go all the way down to GEX3 or not. But yeah, like I said at the beginning, there is a chance for a pullback today, despite the all-time high craziness. This is what options levels can do for you. They can give you like situational awareness. But yeah, they are definitely game for scalping too. I'm not a scalper. I used to be. I'm not anymore. I'm a bit too old for that now. So I prefer just like, if I can be like one and done on the day, that's brilliant. But if not, if like the first couple of trades don't go well, then I will have a big break, like a couple of hours. And then I will try to find another product to play with. And then, 3 to 5 trades on most days is what I would expect. All right, so slowly getting down to that call wall. So the buyers are pretty weak here. So it's gonna go all the way down. What is this, guys? This looks very, very newsy. Is it a Trump tweet? Like, look at that. Yeah, X3 on the way. Look at that craziness. Are they now going to hedge against the X3? I don't know. I don't see anything. Does anybody know what the hell's going on? Would you buy the call one? No, I would only wait for the price action to show me the way. I don't do like limit orders or punts, right? I don't trade. Like, here's the thing. Sometimes people are like, oh, the level is there, let's go in. That's not how you trade. Like, you wait for the level to come in. So let's imagine as if we're like a machine code. Like, you're coding something and you're waiting to see how the machine works. So coding works in two parts. One is defining the level, but then you have to define an entry. You can't just go, oh, yeah, it's a level, go in. Like, no bot does that. Okay, and we shouldn't as humans either. So the way you should operate is in 2 stages. Actually, let's say 3. What do you want to do? So level, what do you want to do with the level? Assumption, whether you want to be a buyer or seller. Is there evidence of somebody else doing that? That's where order flow comes in. Not just like, oh yeah, all right, so now what's happening on Bookmap is that we have some orders at former 4200s that got smashed like it wasn't there. But we are still generally in a positive gamma environment. So now that we went lower, you can see the orders. So we know that there was a call wall there, but the orders are kind of trying to fight around it. And we'll see whether this is just one massive pullback and whether the call wall will now be supportive or not. So now we wait. You wait to see whether they start stacking volume to the upside or not. Right now it's a no. They stopped, so they went through it, went back up, then stopped, and now we're selling off again. So you saw that, right? You saw that in the order flow. Came up, so smashed through it, came back up to the orientation point, stuttered, and then you saw more sellers come in. So that's where order flow is the most valuable. Now, whenever I'm doing streams and stuff, my attention is very much divided, but I usually use order flow at the point of my entry. So if I want to make sure that I'm on the right side and then somebody else with bigger pockets is also on the right side, I wait. So I will never execute an order just because we touched a level. Never. I always look for an evidence of something happening. And again, so if you wanted to scalp, going up to this heat map is showing you at 4200. Somebody sold it. Is it going to happen again? Right now they're disappearing, so they're trying to break through it. Still no orders here. But we know that in previous iterations there was interest here for shorts, further shorts. Is it going to hold? So now, if it's going to hold, you want to see orders stacking at the 4200. So something that's almost creating like a step or like a new floor to go higher. And now you see which side is going to take it out. So this is still a little short for me. But there's not enough people just yet. So let's see if they smash it again from this area. And again, this is very unusual for gold. All right, so more orders being built around 4200. They take it out, so there's always a liquidity grabs, even on micro time frames. Let's see if this one holds now. So now you have a shelf. Now they're fighting. It's like, who's going to win? Are we going to win? And now they're taking out again 4200. We need to go below 4200 if this is going to continue. There it is. So if you want to scalp, learn how to read tape properly. And then you'll have, you know, options chain, tape, and then you're just scalping whenever you see these orders coming in around inflection points that you take from the options market. You don't really need a proper chart. You just need some reference price points and be done with it. There's a different style of trading. You know, I'm not a scalper, but like I said, I used to be, so I do know how to read tape pretty well. But I need the tape to be lively. I cannot have tape that is super slow because that's like, nah, nothing. But you can definitely scalp, you know, 10, 20 ticks easily, like multiple times. However, scalping for newbies, please don't do it because you're going to get lost like immediately. After about the first 5-10 trades, you're going to lose your head. There is no rhyme or reason. However, if you are somebody who's already experienced, then this sort of approach can be invaluable because you see behind the scenes, you see what they want to do. And now they're creating a much calmer ceiling. Let's see what they do with it. So if they sell off yet again, so 4,200 gamma wall, still a point of interest. They're still fighting. They keep assaulting it though, so they keep kind of going into it, selling off, going into it, selling off. That's important, right? How many times are they attacking the level? And you ideally don't want to see it attacked for more than about 3 times, because anything like really ideally once or twice, and then you want the level to be reactive and to hold below it. If it doesn't, then there's a very good chance that they go back higher. So, you know, the rule of kind of 3s, 1 to 3 tests, expect a break. 1 test and a strong push away from it, brilliant. That's what you want to see for a continuation trade. But yeah, if you want to scalp, these levels are excellent. However, I would never do it without some sort of dome, time and sales, or bookmap. Bookmap has been a godsend for me personally. But yeah, I only use it at the point of entry, and then I don't, like, I'm not going to stare at a bookmap all day and tick for tick if I'm in a trade that's going to last me 6 hours. You know, completely pointless. And that's what price charts actually serve me a lot better. But yeah, I don't know what this was. If anybody knows, let me know. Rod says 560 ticks on GC. That's considered a normal pullback. Yeah, I know, right? We live in some very exciting times. I mean, when I first started trading in 2007, we had a very quiet year in Forex. And I started trading in and around like the summertime. So I'm like trying to learn all of these like concepts, and I'm looking at the price action. It's just so slow. And you know, you get to a point where you're looking at your internet connection and going, am I on? Is this thing on? And I had the same thing for crude oil. Like 18 months ago, it just died a death. And I remember looking at post NY cut and into the euro close. It's just like not a single tick goes by. And then like every 5 minutes, it's like, bloop. Oh, there's a tick. Oh, great. And I'll tell you, it irks me. It really, really irks me because crude oil used to be insane. And then it went away. And then I moved away from it. So now I trade RBOB. I trade copper. I trade gold. And occasionally platinum and silver. But yeah. Things change. Liquidity changes. And, you know, if you were watching Fast Markets yesterday, somebody said how... what was boring? Oh yeah, that ES. Yeah, Mandy was like, "Oh, ES is a bit dull. It's a bit slow and boring," and and Andre's like, "Oh, you think ES is slow now? Wait till I tell you how it used to be." Because when I joined a prop firm, ES was moving, I kid you not, 4 points per day for the entire day. Your range was like 16 to 20 ticks. That's it. That was slow. You know, what we're seeing now. So I think we've gotten a little bit spoiled with some of the super high liquidity products that we have. But there will come a time when that goes away because that's just how it is. Whether it's, you know, in 5 years' time, 10 years' time, I don't know. But I've watched the markets for a very, very long time. And I can tell you that they go through periods of extreme lack of liquidity. Extreme lack of liquidity. It's like a snooze fest. And if you then rely on momentum strategies, you're going to have one hell of a time making money while that's happening. And that can happen for years on end, for years. Like we had ES that was moving well before the credit crunch. Then they had the credit crunch and the QE as a result of that. As soon as QE was introduced, quantitative easing, they had completely locked down liquidity. So, you know, any sort of movement that you saw was in and around the releases. And it would just jump up and down and then die a death. And we had that, I think it only started coming back sort of towards 2016 maybe. But it didn't really, the liquidity didn't really properly come back into equities until COVID. Then everything went nuts. And now we have this like slightly higher liquidity that we're seeing. Not super crazy unless it's tariffs. But in between COVID and now, we did have liquidity that went up, went higher, and stayed higher. So now we have these beautiful ranges. And I think, honestly, it's making some of us quite spoiled. Could this form longs? I don't know. At this point, it looks like a pretty big sell-off. The fact that we're back into Asia range, we now have a really high possibility of rotating at least to 75% of the Asia range. So I wouldn't necessarily want to fight that. I also am not going to be the one to short this. So the problem with this whole picture is that we overshot the call wall, but it's still holding. So to me, and yet the risk to get into this, I would need to place my stop all the way down below here. Don't want to do that. That's where the spike was, and that's where the natural lows were. So really, until this falls to the GEX3, so my original plan, I ain't doing nothing, man. How does Ho put it? I'm hands on the butt. Hands on the bum, and don't do anything for now. Just because something is moving like a massive red candle, to me, that's a sign of warning, danger. Not, whoo, let's get in. It's like, no, this is an outlier. I don't know what caused it, so I can't even tell you what I expect this to do. Because at least if we knew what the cause was behind the news, you can sort of sift out if it's a negative or positive, and then use a bit of that macro analysis to figure out what they want to do with it. But since I don't know the reason behind it, it's way too big of a candle to do anything with it. And I actually stay away from this. People who blow up a lot, they're the ones who get excited about these moves. It's interesting to watch, for sure, but, you know, get some popcorn and beer, and then watch the show. But don't, like, this is way too much risk. And this is where, yes, we are risk takers, but if there's too much risk and not enough reward, the way I'm seeing this, I don't want any part in it, because even if I wanted to be short, we're in the middle of the candle now. So really for a short, a retest at least of the Asia high somewhere, or in around this supply, so 42.25, that would be acceptable for me. But right now, going short means that your risk is too high. Going long also means your risk is, so it's like, I don't want to be doing that. So you can watch tape and how it behaves, but I'm not trading this. I mean, there's still some sellers. They're getting a little bit patchy, though. They keep creating orders away higher up from the prices. That could be a bearish sign. So that's the only thing I can figure out. If like, let's say I was a little crazier, and I'm like, oh, I really want to trade this, I would wait for some structure to form on a lower time frame and then go in. But honestly, after 18 years, nearly 2 decades of doing this, it's too much mental capital, you know, too much mental capital. Because if you want to trade that way, you have to stare with the little tiny time frames and then go, ooh, okay, let me see what happens in this low liquidity node, and then I'm going to maybe wait until they retest that, and then if there's another sell-off, then I'll go in, and then where do I take it off? At the call wall? Maybe that's TP1, and then GEX3, maybe that's profit target number 2. The way I do it is much less stressful, right? It's like you wait for your level to come. Where's my level down at GEX3? We're nowhere near it. Nowhere near it. And I said the time of day is a huge component in what I do. So if we were still hanging around this call wall in and around euro close, I'll consider longs. Absolutely, I'll consider longs. But we're nowhere near that. So nowhere near my levels, nowhere near the time of day for continuation longs. Nearly got to GEX3. Almost, but just missed it for a little while. Little bit. So now there's no position because it's unfavorable to me. Too much risk, not enough reward. When watching price, what are your reference points to indicate when it's cheap or expensive? If looking at previous price points, you're looking at levels. So here's the thing. I'm not just a mean reversion trader. If I was, I would only be looking for prices to be, let's say, opening up above value by anything over 0.5 of a percent. Ideally between 0.5 and 1%. That's like medium imbalance open on the day. And then I would look to short that as a mean reversion trade because I think on most days price is looking like that, either too expensive, so if it opens above value, if it opens below value, like yesterday on ES, that, like I said it at the beginning of the fast markets, I said, well, we opened 0.66% below value, and that usually is pretty good conditions for a full mean reversion at some point. And I did say I wanted it to happen pretty quickly. However, we had an outlier. We had a gap that needed to get filled, and then they only started running up the mean reversion in a V shape. But I said it at the beginning. And then if it's a continuation trade, I would like to see it at VWAP at the very least. But sometimes I do go into positions that I call strength from inside initial balance. So basically you have gold that, let's say COMEX opens, we do the head fake to the opposite side, so it's short, and then it goes back into a green candle, then extends the initial balance, but then whips back into the previous range. So what I would do, I would look for strength inside initial balance to happen. And I call that SEEB. Strength inside initial balance. So that would be a continuation trade. Do I care that it's really high up? No. But what am I basing it on? I'm basing it on the fact that we already extended the initial balance, but just had a little wobble down. However, I'm expecting the strong trend to still take over. All of that needs to be ideally happening slightly above value, only slightly, like 0.2, 0.3% at most, or to be happening as we're leaving the Asia range for COMEX. So if we're still inside the Asia range, I will look for more range-bound strategies. But yeah, I have multiple setups. So to me, the whole, like when people ask me, oh, premium or discount, that's the ICT concept. I know about it, but I don't use it personally. And to me, I suppose it's a similar way of looking at supply and demand, but there's so many other things that I look at as a part of my situational awareness that I will decide on the day whether I'm going to do a range strategy, continuation, or mean reversion. So there's 3 types, right? Sideways, mean reversion, or continuing whatever they started. And if I can fit my playbooks into that for greater situational awareness, that's nothing but a subtext of the main 3 components. So to me, it's a very kind of systematic process on most days. But having said that, I wish I had the patience to just trade my highest probability setups, but I don't, right? I'm not that perfect. And I will do punch trades. I'm like, let's try this on a 1 micro, see what happens. And why? Why partially is because we are doing the streams. And, you know, people want to see you trade, but I don't know. At this point, I don't really care. So it is what it is. Because I've been on YouTube long enough to stop caring. I know that Coach Dakota is trying to battle it out on FinTweet land. I gave up on that many years ago. Like, and every time I tried to post something on Twitter, no matter how good you do, like I posted a huge streak of like, I don't know what it was like 18, 19 days of green, and some idiot was like, oh, yeah, but I mean, you did like 20 trades here. It wasn't 20 trades. It was 5 scaled in and out. Of course, you didn't know that. And he just ripped into me. And I was like, whoa, man, like, really? I posted a streak of like, come on, 4 months worth. And he's like, yeah, that's not good enough. Yeah. And, things like that. You just can't win. Like Port Dakota, he makes $250,000 in one day on one trade, and somebody goes, yeah, but it was only a 1-to-1. I mean, you would have done better if you've done this. And I was like, yeah, where's your $250,000, man? It's like, shut up. What the hell? Like, why so toxic? Like poison, venom. Everybody on FinTwit just seems like they're so... I said that really weird. FinTwit? I don't know. On Twix. Let's call it FinTwix. Everybody, is so... And I think it's because of the rage bait engagement algorithms that we have right now. So the more kind of annoying your posts are, the more engagement you get. I honestly couldn't care less about that. Like, I'm here because I love trading, and no matter what's happening, if it's a small red day, beautiful up day, small green day, big green day, it doesn't matter. I love this game, and the sheer intellectual challenge that it brings me is what keeps me coming back, because it's like a new puzzle every single day. It's amazing. You have to play detective and see where the clues are, and the level's always slightly different. so I'm a huge nerd when it comes to that, and that's why I've stayed. I love it. I just absolutely love it. But this whole industry that we have right now, that's turned into who's going to bash who more, and who's going to cry on air. It's like, just stop, man. Like, I'm too old for that shit, way too old. And I couldn't care less. It's like, you do you, okay? You do you. But, every so often I start thinking, well, maybe I should stop posting on Twitter. And then I very quickly remind myself why I post dog pictures and random things that have very little to do with trading. Sometimes I post a chart that looks interesting. But most of the times I'm not going to be posting anything. Because I did that back in the day when I joined Twitter, like half a millennia ago. Yeah, usually you get so much negativity that it makes, like, even if you're doing really well, that whole personal attack on people that you don't even know, you've never met them, you're just like keyboard warriors, in their mother's basement. That sort of behavior just breeds toxicity instead of celebrating each other, because this is such a tough environment, such a tough industry to be in. Why make it harder? This is emotionally very difficult for most people. And you want to make it even harder by bashing people who are obviously doing well. Like, I don't get it. I don't know. Anyways, let's move on from my rant. Age Production said, don't cap, those dollar signs keep you coming back. No, actually, at this point, like, if it was just the dollar signs, I would have quit anytime I had a losing year. Then I've had like 3 of them in the past 18 years. It's not the dollar amounts that should keep you coming back. If it is, you've got something wrong with your life in general, because you're just chasing money. You're not chasing real happiness. And the reason why I say that is because I have a pretty serious chronic health condition at this point. And trust me, money means nothing. It means nothing. If you don't have your health, you have a whole host of other issues that no amount of money can solve, because there's no cure. And you start to realize that spending time with the people you love, doing things you enjoy, it's much bigger than any dollar amount. And, maybe you're not at that point in your life yet, and I hope you never will be, because chronic illnesses are not fun. But yeah, you do come, even without that, you do come to realize that, you need to cherish people around you, and you need to make sure that you're kind to yourself and to others. And if you're not, I don't want anything to do with you. It's like, This is Twitter trolls mainly that I'm addressing. And trolls that we've seen here as well, who comment here and they're like, well, I made $2,000 and you're $100 down on the day, but I'm $2,000. And then I'm like, yeah, how long have you had that account? 2 weeks. And I'm like, yeah, well, I've been in live accounts and Topstep since like January 2024, and before then since 2015. But hey, man, you do you, So yeah. Do you ever take someone else's trades on Topstep? Never. The only time I would take a trade with someone else is if we've talked it out. Like, let's say I'm on with JD or with Jack and we talk through a trading idea and then we all agree on similar levels. Like, if you've watched TopstepTV at any one point, you know that Jack also uses options levels. Then we have Coach Robert. He uses pivot zones that he kind of projects to different levels, and they usually match with something else that I'm looking at. Then Jay looks at volume. So every time I'm with either one of them, we always come to the consensus that a particular level is of interest to everybody. And then I will take that trade, but not just because somebody else said it. Absolutely not. Like, that is just the worst way you can trade, because you're just following somebody else. You're not actually figuring out by yourself what is happening. So in a way, it's kind of like somebody, what would be the best thing? Somebody giving you some money versus you actually having the skills to earn it. What is more valuable? Because one is just, somebody give you money, that's a one-off. So what are you going to do next time you need money? Go up to them and go, can I please have some more, sir? No. But if you learn the skill properly, you will never need somebody else to tell you how to trade and what to do. Never. And that's the whole point of situational awareness, that when I look at a chart, I have these orientation points. Now, I laugh at some of the ICT traders when they come in. Not everybody, most are pretty kind, but sometimes you have some people who come in and there's a lot of lines on the chart, and his username is like ICT something. You're going to tell me that my lines are too much? Like, are you joking right now, man? So yeah, it just, it makes me laugh. But to me, every single price level here gives me situational awareness. And it makes me very selective with the types of trades I want to take. So I know that my trades that I am planning, if price action permits at the time, around this zone that I pointed out at the beginning of the stream, that carries a higher risk reward and goes with the overall trend, and therefore offers me whatever amount this is. So I'm going to project that. So let's say from ADR low all the way up, it is offering me 600 ticks of a profit margin availability. Now, this does depend how and if we get down here. If we get down to these levels in a clean price action, so there's not many kind of inside bars or consolidations on the way, and it all looks pretty clean on a 15 and 30-minute charts, then you know that if we start to ping back, there's nothing to stop it from coming back all the way up. And then instead of me grabbing 30 ticks, I have 600 ticks in my pocket. So whether I'm trading one micro or one mini is down to, my personal risk appetite on the day, but also the amount of stress that I have in the week and whatever. But it's still a lot of cash. Whether you make 600 or 6,000, it's a lot of money for very little work. You just wait for the level, wait for price action, go in, go do something else, come back. But obviously the stop losses have to be a little bit bigger in order to absorb whatever's happening. And right now, with the way ATR on the 30-minute period is looking, I would still need to use like 120 ticks up just to make sure that any wiggles and wobbles don't take me out. Because remember, I'm going for 600 ticks, not in this particular case today, because that is the range we're working with, MGI, market generated information. Why would I want to lose my eyes and my brain just scalping tiny little bits, tiny little bits, tiny little. Like, I'm not a market maker. I'm not providing liquidity for anyone, nor do I care to, right? So I'm just trading my own views. I don't have a volume that I have to fill on the day. So there's nothing from stopping me from still doing my job well and doing it in one trade over 50 trades. Does that make sense? That's just how I see it after 18 years. Now, look, my answer was very different 10 years ago, right? I was very much somebody who would do 15 to 20 trades per day on 5 different products. Absolutely. But over the years, I settled down and I became calmer as a person. I don't know. I'm just not that bothered by multiple. In fact, every time I see somebody doing 50 trades a day, I'll be like, no, but why? And then I go quality over quantity. And every time I put somebody on my idea of 3 trades per day, you have 3 swings at the bat, make them count. It immediately changes the way they look at the chart. Because they're like, oh shit, no, I can only do 3. So what would be the best ones? Like your brain immediately goes into this like solution and problem and solution mode, and you give it a task. What if you only had 3 attempts every single day? How would your P&L look? And what would your decision be? Would you take that little punt trade from like, a little bit of momentum? Let me just grab 10, 20 ticks. No, your brain would change to make sure you get the most out of those 3 trades that you're going to do in a day. And once you reach that point, it's very liberating because you're no longer in this, watching every tick. Is this an opportunity? Are we bouncing from VWAP? Should I go in? Where should the stop loss be? Should I use this as this kind of chaotic, I call it the grasshoppers who just like jumping in and out of positions all the time, and they're very strung out, and they look like they had a line of coke right before the stream. And I'm just like, chill, man. Like, there's a different way. And then when the day doesn't go well, the risk of ruin is usually so high that they blow up like spectacularly in a single day. And then they're like, oh yeah, I've broken laptops. It's like, you're not supposed to break your machine over one red day. And if you do, sign up for some anger management or something. Why do Topstep people hate on ICT? I've never watched a live stream where they took positively. Do you really need to ask that? Look, it's not the concepts. The concepts he talks about are sound, but they are repackaged from many decades ago. Fingerprints are FVGs. They have existed in the prop world since 1986. His idea of discount and premium has been done by supply and demand, again, decades ago. Liquidity sweep was known as a stop, run, and reverse. We've known that since I started in prop, like way before. If you ask Hoop, who's been trading for like 30-some years, hey, stop, run, and reverse? And he's like, yeah. Yeah, we used to do that all the time. So the problem that we have with, not necessarily with his concepts, but there's 2 things. So I respect the concepts. I respect the fact that he's made things available, but he's repackaged stuff that we've known about for many decades. So that's one problem. Repackaging stuff and then calling himself an algorithm is another. A big one. That's why we have a problem with him. Not because of the concepts, but because of the crazy, insane stories that he's kind of come up with. MIBs kidnapping him in the middle of the night because he knows too much. And because there's this like whole cult smell about it. That's the reason why none of us like them. And most of the people who are devotees, they behave like that. They behave somewhat culty. And they're like, oh, don't touch ICT. It's like, I'm not touching anything. I'm just saying it like it is. Because some of his stories are totally unhinged. You can't disagree with that. But the concepts are sound. The fact that he decided to call them extraordinarily complex things is another thing. But they're sound. Like, if you take a few that you are resonating with, yeah, they can be very profitable. So, yeah. It's not that we are against him. It's just, you know, the crazy. Like, imagine if I just sat here and I go, yeah, guys, I was abducted by aliens, and they told me that they have an algorithm by which they can predict the markets. It's a great story. Like, a 3i Atlas is here to bring me an update about the trading math that they've been working on. So yeah, we'll bring that all to you. It sounds a little bit out there, doesn't it? So that's all I'm saying. You know, concepts are sound, stories a little bit out there. Let's move on. Yeah, exactly. Deke says it. Because many of them have been trading for decades, so for Coach's whole group, Jack is like ITU. No, we all know about him, but it's just the craziness. Yeah. Yeah, kidnapping. Yeah, kidnapping. Apparently, MIBs took him in the middle of the night, and they held him in a room. Like, come on. Really? Oh, God. Yeah, exactly. I mean, Michael, like I said, the concepts work. You know, it's a bit too many. So if you can just find the ones that you resonate with from any concept, really, yeah, it's literally a study of price action. I wouldn't call it tape reading, because that's another beef that I've got. He looks at a price chart like that, and he's like, yeah, let's read some tape. It's like, dude, this is tape. Like, what? But hey, let's call it price action reading. Yeah, price action. Excellent. And, you know, he can't execute himself, but he is able to take you through everything. And if I just did that, and, you know, people would think, oh my God, Dee's a magician, because I can explain to you exactly what is going on. However, without involvement in the actual markets, it doesn't mean much. It just means you're narrating like a football game, right? You're like, oh yeah, or a cricket game. Have you, I don't know how many of you actually watched cricket games, but they are so funny. I don't like cricket, but the commentary is hilarious, because, you know, the game lasts for so long, they have to talk about something else. And I kid you not, because my husband loves it, and he's, you know, watching a game, and I'm just doing something else. So I hear the following: the pigeon is on the pitch. It is walking around. They just say there's a pigeon. Like, I said, is that like a code for something? And he's like, no, there's an actual pigeon on. It's like, really. So it's like narrating what is happening in price action is so much easier than actually trading it. So, you know, if I sit here and I just go, hey guys, so we've just had, you know, Cold Wall was actually reactive if we look at it. So, you know, that's what we expected to happen. And now we're sitting above VWAP. And there is a chance that if this breaks through the high, it actually goes all the way back where it came from. And then that happens, I look like a bloody genius. Did I trade it? No. What's the difference? Well, there was no risk in the game, right? No, there was no risk involved. I just read literally like a commentator. I read what's happening. I'm very good at that. Most of us are. But execution, where you put your stop, how will you manage your profits? What if there's a little bit of profit, but then things slow down? Do you take it off? Do you stay in? And that's where situational awareness can happen. So from that point of view, not being in actual trades, and from what I've seen, he's always paper trading. That's a little bit of an issue. But still, there's a lot of skill there. Nobody's ever going to deny that. So yeah, commentary versus actual risk, very different. Not aliens, purple tip, not aliens, Men in Black. And I couldn't even, I was like, is he like just making this up like for clout? And I still don't know, because the way he was talking about it was very emotional. So it wasn't aliens, it was MIBs. Men in Black apparently came to get him because he knew a lot. But how would that work if you are the algorithm? Surely everybody knows you're the algorithm, and then they wouldn't, like, I don't know. Maybe I'm reading too deep into it. Ben says, I watched a video about those option walls. Can you give me more resources to learn about those things. Well, actually, if you sign up for MentorQ, they have a really, really good resource. They have a ton of lectures about it, what each of those levels mean, how to look at them. Like they're really quite exhaustive in what they've done as a company. So they do have a lot of webinars. And also, if you're looking for more information, I do believe they run live sessions on Discord too, and on YouTube. I've done a couple of webinars for them in the past because I know Fabio and Patrick. Patrick is hilarious. He's a great trader, very funny. Fabio is awesome, very clever. He worked for Bloomberg for many years before he created MentorQ. So, you know, a lot of skill, a lot of knowledge there. So yeah, have a look at MentorQ. They have a lot of videos. And yeah, you may even see me and Anne-Marie in a couple of those because we've done work for them. Well, work. We joined them for a discussion. I've never seen any of you call price to the tick beforehand multiple times, however ICT has, so why hate? So can we just stop with this now? Because if you think that I've never called price action to the tick, first of all, you don't need to call anything to the tick. It is not necessary for profitability. If the trade works out and you get 2, 3, 4R out of it, does it matter that you use the zone versus a to the tick? It doesn't in the long run. So what you're saying there makes 0 sense, okay? Makes 0 sense. Second of all, you're on my stream. So, you know, I'm going to say whatever I want, and this is my opinion. You don't have to be adopting my opinion. You're absolutely entitled to your own. If you like ICT, you do you, man. Keep going. If you're doing well, no problem. Keep calling prices to the tick. But after 18 years of doing this, I can tell you that that is not necessary. It's total overkill, complete mental resource sucker. And after a while, that gets very, very tiring. And also your ICT, he makes a lot of money from actual YouTube watch time. So, you know, this whole idea that, oh, it's all for free and it's all like very philanthropic and stuff, it is not for free. So anytime you watch the videos, everybody gets paid for it. And when he's got like, what, 1 million followers, how much money do you think that is? And, you know, so it's not the hate, it's the stories, it's the slight deception about certain things. And, you know, calling prices to the tick. First of all, me and Dolby did these amazing range trades on crude oil not too long ago, where we called them with like a 2-tick drawdown because it was a stop run and reverse type of trade at the right time of day. We both talked it out. We agreed it was a range bound day. We waited. So that there, where you're saying, I'm never going to tick, that's just not true. That was my TED talk. Thank you for coming. Yeah. So anyways, let's just finish this up because I see that ICT devotees are coming in strong with the cult side of things. And I don't have the energy for that, nor the time. So I'm going to finish it here. Very interesting sell-off in gold. So far, still holding a call wall. We will see whether GEX3 41.75 gets tested. Wouldn't be surprised if it overshoots a little bit to go down to COMEX value high. And maybe even ADR low. And then we can expect price action to maybe find some relief again to the upside with the overall trend. That's all from me. Thank you for joining me. Even the trolls, the ICT trolls who are here to bash me and going, I've never seen you. I've never seen you do this. I love you guys. I love everybody. Just be kind. That's all I'm going to say. Life is way too short for nonsense like that. Anyways, I will see you tomorrow for the Thursday. Is it Wednesday today? Yeah. For the Thursday edition of the Euro Trade, and then we have the lovely weekend. In the meantime, trade safe. Don't full port anything. That's never a good idea. And thank you for spending time with me. That's all I have. Goodbye.